Hello. Chapter 6 on audit responsibilities and objectives. So this chapter is going to go into explaining the objective, conducting an audit of financial statements, and an audit of internal controls, distinguishing management's responsibility for financial statements and internal control from the auditor's responsibility for verifying the financial statements, and effectiveness of internal control. Objective 6.3 will explain the auditor's responsibility for discovering material misstatements due to fraud or error and need to maintain professional skepticism when conducting the audit. 6.4 will classify transactions and account balances into financial statement cycles and identify the balances into financial statement cycles and identify the benefits of a cycle approach to segmenting the audit. Then we will describe why the auditor obtains a combination of assurance by auditing classes of transactions and ending balances in accounts, including presentation and disclosure. Then we would distinguish among the three categories of management assertions about financial information, then link the 6 general transaction-related audit objectives to management assertions for classes of transactions, followed by link the 8 general balance-related audit objectives to management assertions for account balances. 6.9 will link the 4 presentation and disclosure-related audit objectives to management assertion for presentation and disclosure. And 10 will explain the relationship between audit objectives and the accumulation of audit evidence. So there, figure 6.1, there are steps to develop audit objectives. It would be to understand objectives and responsibilities for the audit, divide financial statements into cycles, no management assertions about financial statements, no general audit objectives for classes of transactions and disclosures, and no specific audit objectives for classes and transactions, accounts, and disclosures. We have the manager's responsibilities and then auditor's responsibilities in 6.2 and 6.3. Auditor's responsibilities has errors versus fraud, professional skepticism, elements of professional skepticism, fraud resulting from fraudulent financial reporting versus misappropriation of assets, and laws and regulations with a direct effect of financial statements. In 6.4, with the financial statement cycles, the section talks about the cycles used in this text are listed below and then explained in detail. With each cycle, there's sales and collections, and acquisition and payments, payroll and personal cycle, inventory and warehouse cycle, capital acquisition and repayment cycle. There is a figure 6-3 on page 149 talking about how the transactions are sent to journals and then followed into ledgers, trial balances, and financial statements. Objective 6.5 is setting audit objectives. There is also a figure 6-5 on page 153 talking about the relationships among transaction cycles. You get to look into that. 6.6 will be management assertions. There are 3 categories for internal auditing standards and AICPA auditing standards. There's assertions about classes of transactions and events for the period under audit. There is assertions about account balances at period end, assertions about presentation and disclosure. Objective 6.7 is transaction-related audit objectives. There is occurrence, recorded transactions exist, there's completeness, existing transactions are recorded, and accuracy, recorded transactions are stated at the correct amounts. Objective 6.8 is balance-related audit objectives. There's general balance-related with the existence and completeness and accuracy, classification, cutoff, and detail tie-in, with realizable value and rights and obligations. How objectives are met are talked about in chapter 6 Objective 610. There are 4 phases of financial statements. There's phase 1, plan and design an audit approach. 2 is perform tests of controls. 3 is perform analytical procedures, and 4 is to complete the audit, issue, and report. That is chapter 6 in a nutshell. Now chapter 7, we will be discussing, I don't know. Hold on. Hold that thought.